Welcome to the Moving Markets podcast on Tuesday, the 24th of February, with me, Bernadette, Anderko. Not only have drug companies been in the news this week, but we've also seen new research emerging in the Alzheimer's space that could impact the genomics theme. So I'm looking forward to catching up with our next generation analyst, Damien Ng, to talk more about that later in the podcast. But first, as always, we'll be catching up on the latest financial markets headlines with my colleague Lucija Caculovic. Good morning to you, Lucija.
Good morning, Bernadette.
Lucija, it definitely feels like we're navigating choppy waters at the moment, what with escalating trade tensions and ongoing anxieties around artificial intelligence. But I'd like to start today with the new tariffs announced by President Trump. Europe responded quite strongly yesterday, pausing ratification of the trade deal. Can you talk us through that?
Sure. So following the Supreme Court striking down his previous tariff policies, President Trump swiftly announced a new blanket 15% global tariff. This sparked immediate alarm across Europe. Officials were meeting yesterday and they're seeking clarification on how this impacts existing trade agreements. What's interesting is that while the headline tariff isn't changing for many regions, the UK ends up being hit harder than others with a 2.1 percentage point increase. The EU sees only about a 0.8 percentage point increase.
So it's not necessarily a change in the overall amount being paid, but more a shift in the burden.
Precisely, and markets reacted quickly. The Stoxx 600 closed down almost 0.5% yesterday, which shows how uneasy investors are.
And that uncertainty clearly extended to US markets as well. We saw a substantial drop in the Dow Jones yesterday, falling 1.6%, and the Nasdaq Composite and S&P 500 were also off more than 1%, with the S&P's performance now in the red for 2026. So what contributed to that slide, Lucija?
It was a double whammy, Bernadette. The tariff announcement definitely increased broader risk aversion, but equally impactful were growing concerns about the disruptive potential of artificial intelligence. Once again, I feel like a broken record. Now, specifically yesterday, IBM dropped sharply after Anthropic launched new coding abilities for its Claude Code product. Other software names like Microsoft and CrowdStrike also fell. There's a research paper making the rounds suggesting AI could cause up to 10% unemployment, which added to the nervousness. Financials didn't escape either, with American Express and MasterCard both falling.
Okay, that paints a pretty concerning picture. But on the flip side, did anything buck the trend?
Yes, defensive names held up better. Companies like Walmart and Procter & Gamble performed relatively well. Gold also benefited from the flight to safety, rising over 2% yesterday to a 3-week high. It is slightly lower this morning, though. And Bitcoin kept sliding. It's now around $63,000.
All right, so focusing on something in the corporate space, Novo Nordisk faced a significant setback yesterday with its weight loss drug trials. How serious is that for the company?
It's a pretty big setback. Their next generation weight loss drug didn't perform as well as Eli Lilly's in trials. Because of that, Novo Nordisk shares fell more than 15% yesterday, hitting a multi-year low. Lilly also dipped a bit, but this outcome largely strengthens Lilly's position in the weight loss space.
Let's take a look at Europe for a second. We received some encouraging news yesterday from Germany with the stronger than expected IFO business climate reading. Could you elaborate on what that signifies?
Yeah, specifically the IFO index rose to 88.6, exceeding expectations, as you said. Now, more importantly, both current assessments and expectations improved. So companies reported feeling more satisfied with their present business situation. And crucially, they're becoming more optimistic about the future too. IFO's president even described it as early signs of a revival. It's too soon to call it a full recovery, but it's definitely a positive signal for Germany.
Turning to Asia, overnight we heard reports of China imposing export controls on Japanese entities. What's behind this move?
Yeah, so Bernadette, China claims these restrictions target entities supplying Japan's military framing it as a response to perceived remilitarization. They have specifically named units within large corporations like Mitsubishi Heavy Industries. China insists this will not disrupt normal trade relations and firms can apply for exemptions. Nevertheless, it adds another layer of complexity to the geopolitical landscape.
And how have Asian markets responded then, Lucija?
Well, it was mixed. Japan's Nikkei rose and South Korea and Taiwan also had solid gains helped by semiconductors. Hong Kong's Hang Seng struggled mainly due to healthcare names and more specifically Pop Mart. Now, mainland China was higher as markets reopened after Lunar New Year, and the unchanged loan prime rate may have also supported China.
Finally, Lucija, looking ahead, what key data releases should our listeners be paying attention to today?
The calendar is pretty light. In the US, we'll get housing finance data and consumer confidence numbers, both good indicators of how the economy is holding up. The Richmond Fed Manufacturing Index will give another regional read. And as for later today, US futures were slightly in the green when I last checked, so let's see how things unfold.
Super. Thank you very much for the thorough roundup this morning, Lucija.
Thanks for having me, Bernadette.
And now it's time to turn to my guest, Damien Ng. Hello, and thanks for joining me today.
Hi, Bernadette.
I mentioned at the start of the podcast that you've got an update for us on an Alzheimer's story that's hit the news wires this week, namely that scientists at the Washington University School of Medicine in St. Louis have unveiled a breakthrough method for predicting when individuals may begin to exhibit symptoms of Alzheimer's disease, utilising just a single blood test. So perhaps you could fill us in on the details.
Yes, Bernadette. Well, given that 7 million Americans and around 55 million people worldwide are currently diagnosed with Alzheimer's disease, this gives you an idea of the number of people impacted by the neurodegenerative disorder globally. And recently, scientists at Washington University School of Medicine have developed a simple blood test that can estimate when someone might start showing symptoms of Alzheimer's disease. It is therefore definitely an exciting step forward, especially for early detection and prevention of the brain condition. Now, in a study published in Nature Medicine, the team from the university showed that their models can predict the onset of symptoms with an accuracy of about 3 to 4 years. That level of precision could make a real difference in how clinical trials are designed for individuals, that is, helping researchers find people with the highest risk and hence test preventive treatments for more effectively. Looking forward, a tool like this could also help doctors identify who might benefit from early intervention long before any memory issues appear. The urgency behind this work is clear. Alzheimer's already affects more than 7 million adults in the US and 55 million people worldwide. And the neurodegenerative disorder continues to put immense pressure on families, healthcare providers, and the wider economy. Just a case in point, estimates from the Alzheimer's Association in the US have revealed that the cost of caring for US adults living with Alzheimer's and other dementias, it is projected to approach $400 billion in 2025, nearly half of Belgium's total GDP.
Okay, so how are these blood tests then connected to genomics, Damien?
Well, in this particular case, in connection with Washington University School of Medicine, genomics helps to explain why a single blood test can say so much about someone's risk of developing Alzheimer's disease. Certain genes, like the well-known APOE4 variant, play a big role in shaping both the likelihood of getting the disease and when symptoms might begin. A blood test designed to predict onset often incorporates these genetic markers alongside protein biomarkers. So when researchers combine these protein markers with genomic data and clinical history, the predictions become even more accurate. And that is why two people with similar biomarker levels, they can still progress differently because genetics shapes their underlying vulnerability. So to put it simply, a single blood test is not just about measuring proteins. Rather, it is part of a broader predictive model where genomics enhances accuracy. And it also explains biological differences between individuals and therefore strengthens the ability to forecast when Alzheimer's symptoms will appear.
All right, then. So what might this breakthrough mean for drug companies and investors when it comes to investing in the genomics arena?
Sure, Bernadette. Now, for drug companies and investors, this is definitely a green light for genomics. If a simple blood test can reliably predict when Alzheimer's symptoms might start, biopharma companies can recruit the right people earlier and run smarter, faster clinical trials. And in so doing, eventually cutting costs and boosting the odds of seeing whether a preventive drug truly works. That is a big deal in a field with historically high failure rates. For investors, it widens the opportunity beyond drugs. Platforms that blend genomics, blood-based biomarkers, and AI risk models suddenly look more valuable. It also supports a broader precision medicine playbook through earlier intervention, better patient stratification, and clearer reimbursement efforts. So in short, this kind of scientific breakthrough does not just help one blood test, but it also strengthens the entire genomics ecosystems from discovery to delivery and ultimately helps to pull more capital towards neuro-focused diagnostics and next-generation therapeutics.
Damien, very interesting. Thank you so much for the update this morning.
Thank you very much, Bernadette, for inviting me.
Well, that concludes today's podcast. I'd like to say thank you again to my guests and to you for listening. Please do tune in again tomorrow when we'll be back with more of our experts to discuss what's moving markets. So don't miss that. Meanwhile, good luck today and goodbye for now.
The information and opinions expressed in this podcast constitute marketing material and are not the result of independent financial or investment research. Please refer to www.juliusbaer.com/legal/podcasts for further other important legal information.